Hey everybody, this is Grant. So it's June 21st, 2017. It's Wednesday. I wanted to do a little bit of E-mini analysis on the day here today. I've got two charts in front of me. On the left-hand side is the market effectiveness chart, and on the right-hand side is the price chart. It happens to be a 1 minute chart on the right-hand side. Let's see, to organize and get your eyes accustomed. The orange lines on my charts here, this is 89 EMA. The yellow are 34 EMA, and then the green are the 8 EMA. I have a couple others over here. There's a 21 EMA, that's the magenta, and then a 200 moving average across here. So to help you get oriented here, on the top left is the market effectiveness chart. What it does is I take the net effect of what's happening on the market itself in terms of a variety of things that comprise the market engine. It certainly includes price, includes effort, it includes volume, and as well as other things. And it takes and creates the net effect of that. And it says, here's really where the effect is in terms of the price movement. Now, the way to read this is, if you look here, you can see, if you follow my mouse, you see where it's coming down. Now, this is not a price chart, but it's telling us that the market is being effective at pushing price down. And how do I know that? If you come down here to the bottom, I have a very simple correlation study here. And it's correlated with the E-mini. And so when it's up here at the top, it means it's highly correlated. That means the market engine and all of its components that comprise it are effectively pushing the market down, and it's answering the question, how effective is it being at pushing price as it goes down? And the answer is it's being very effective because there's a high correlation here. All right, so right here across the bottom. What that means is that when they become disconnected, then that tells us that there's opportunity for a change. All right, and so I wanted to illustrate one right here. This is 9:46 Chicago time right here. You can see it comes down really deep, touches this lower dashed line right here. Let's see what's happening to the right here. So over here on the price chart, what's happening right at that point is price has been moving up. And over here on the market engine indicator, it's given us a nice little double top. In fact, it's not only a double top, it's a divergence here. So we have a couple really nice excuse me, signals. One, we've got price going up much higher. The actual market engine indicator is saying, couldn't quite continue to push that up, so it's running out of gas, getting to the top of the hill. So we have this double top right there. So that's a nice indication, number one. Number two, down here we've got what I call a gear shift. It's shifting gears. It's giving us a hint. It's saying the efforts of all the elements within the market engine on the E-minis are becoming misaligned with price. When that happens, then what we do is we look for this opportunity for it to shift and go the other direction. At least in days where it's touching both sides. And I won't go through all that now, but for our purposes and intents here, the way to read this here is on the right-hand side where my mouse is. So price starts to come down, starts to drift off, and obviously a really nice sell-off. The market engine indicator certainly drops with that. What you have happened over here on the left is that the correlation here now is highly correlated. That means that all of the elements that comprise the market engine are working hard to push down price, and price is being responsive to it, right? So that means there's a high correlation. And if you look on the right-hand side as I go down, you see it continues to push. Price follows all the way down. Now something happens right here. We start to see now several things that occur. First is it's the beginning of another gear shift. All right, so that's saying, hey, these are becoming misaligned with each other. All right, so it becomes misaligned. You can see price is pushing up while the internals here of the market engine are continuing to push down. So you see price is misaligned with the engine. Also down here on the bottom right, then we've got this situation where the market engine indicator is also pushing along the bottom as well. Now it starts to push up, right? And then you can see that the price and the engine start to become aligned again, only momentarily, right? And then it drops off again. So it's a point of confusion and not really great signals, right? The two are definitely out of alignment. So here's something to think about. So personally, I wouldn't trade that coming back up. And the reason why is because this continues to push down below and it stays below the 8 moving average right here. When it does that, it tells me that the overall effect of the market engine is still to the bearish side. Now for a brief moment, it pops up here and it touches this 34 EMA. At the same time over here, it comes up and hits the 200. Again, I'm on a 1 minute chart there. It comes up, hits the 200, chops around, but immediately after that, the net effect of the market continues to push down. So that starts to tell me the strength of the bearish side because the overall market effectiveness still continued largely to the downside, didn't respond nearly as high as this pushes up. So now I have a lot of misalignment here, right? And so here what we've got happening is it chops around here and price starts to drop a little bit. We get another gear shift right here. And this gear shift is a very important gear shift because it comes down and says these two are misaligned. Price is trying to go up again. You can see on the right-hand side there, price is trying to go up again, but everything about the market engine, all of the elements combined together into a single representation continue to push down. The moment that they come back in alignment, which is right up here, you can see prices going down. It does another one of those. Price tries to push up. The market effectiveness chart goes up for a moment, but then it comes back into alignment and price is going down. Now for a brief moment, the bulls are starting to become effective at pushing it up. And for a minute you think, hey, is this going to turn bullish, right? Until the bulls are really pushing on the market. At this point, it's 11:30 Chicago time. That's an important time. So what happens here is price drops off. We get a confirmation on the gear shift, and it's all she wrote. In other words, for the rest of the day, I just continued to just trade to the downside, which means every pullback that came up to the upside, I would just wait for it to break back down and then just take the trade down. And that was the trade throughout the majority of the day. There's one point where I shifted from that, and I'll talk about that in a moment. All right. Okay, but the key point is here, market effectiveness chart continues to just go bearish all the way down. And so when you're trading like that, you take, at least the way I work it is I'll take the profits, then as it pops back up, then I'll wait for it to come and break back down. All right. Couple more gear shifts here on the bottom left, and then it once again comes back into alignment. The market effectiveness chart pushing down gives me more confidence to continue to take the short opportunities all the way down. The other thing that helped with confidence right here in this area around 12:30 Chicago time is that the market engine indicator is having a hard time getting above halfway up the effort here. That's important to note, so you can see the majority of the time where the market engine indicator is spending is down here on the bottom side. Okay, so that's a very directional move. So when you've got the market effectiveness chart here on the top left continuing to be bearish, and then you've got the market engine indicator also hanging to that side, then when price goes up, I really avoid buying it because I have just too many things lining up to say just take the higher probability trade, which is to the downside, to the short side. All right. Okay, let's look at another change right here. I just wanted to point something out here. Let me move some charts around. Okay. All right. There was one point where I did take a bullish trade today. Actually, 2 points. One was right here, and it's a divergence. So price was pushing down, chopping here sideways for a little bit, and I have a divergence. The divergence is that the market engine indicator says, you know what? It's not actually going as low as the price is, whereas it was lower here. Combined with the fact that I had a gear shift right there. Those two things gave me the confidence to say, all right, I have some disconnection here. Market engine's still trying to turn this thing around, and I have a divergence on the market engine. I actually took a bullish trade there just for a point or so, not a lot. That happened one more time also over here. You can see it play again. Let me scoot this over here. All right, let me pull this over and show you another example of where I also took it. Same kind of thing. Came down right here, and then you'll notice that as it popped up, that was a strong divergence right there as well. This price came down, and it was coupled with another gear shift. Here's another gear shift right there. So the combination of the gear shift took place, another divergence here on the market engine indicator. I waited for it to clear the break. Once it did that, took a trade up. I actually didn't follow this up because I wasn't sure how strong it was. Once I knew it didn't come back up here to the 89 on the market effectiveness chart, I ended up just staying to the short side the rest of the day and just taking every pullback that came up, every bullish move up. Once it would break down, I take some quick hits to the downside. That's actually very profitable day to trade like that. So the market effectiveness chart will really help us set bias, right? So in this case, the bias is clearly to the downside, all right? And so in that case, when you have bias that's established by the market effectiveness chart, then over here on the right-hand side of the price chart, then you just choose the location and wait for the breaks back down to the downside. And you have strong confirmation here with the market engine indicator sitting down there. All right, so that's it for now. That is June 21st, 2017, analysis of trading the E-minis. Really strong day for trading opportunities just because of the confidence of the market effectiveness chart. Okay, thanks for joining me. I'll catch you next time.